Well, hello and welcome to everybody joining me and Jay today. This is just a quick reminder that none of what we do here constitutes financial advice. Chart markups are for educational and entertainment purposes only. Please do not copy any trades or trading system without properly doing the due diligence yourself, going in, getting some backtesting data, and finding out what works for you. That is definitely what's most important. Please do not just copy stuff. So, all that being said, we've been having some fun in the background. We had the ICT and SMT course come out over the past month, the price action course a little bit before that. And we thought something that might be nice and fun would to put together a little SMC toolkit indicator for you guys. So this is going to be a little bit different than kind of like the other SMC indicators that you see out there. This isn't going to draw order blocks for you or find fair value gaps or anything like that. This is a bit different. This is going to showcase some of the stuff that our streamers use, just as well as some good old fashioned SMC stuff. So I'm going to unhide it from my chart here. And I'm going to hop into the settings real quick. And we're going to hide most of it to start off. And I'm just going to kind of show you guys the features one by one and show you a little bit about how we might go about using some of these features. So one thing I do want to say right off the bat, when you guys get around to using this, it's going to release, I think, later today, Jay?
Yeah, it should be 6 p.m. New York time.
6 p.m. Yeah. So
it's free. It's a free indicator that we're putting out.
Yeah. So my thought for this was to give people kind of choices, options to find like very mechanically drawn levels every single day. One of the things when I was learning SMC that I found very difficult was trying to pick the right point of interest. And that part of the process to me felt like where I struggled. So one thing I kind of set out to do was find very mechanical levels. And I found some that I think are really nice. They work really well in Forex and indices. And like I said, it's some stuff that's taught in the SMC and ICT course, as well as some stuff that's shown off by some of our streamers. So really happy today to bring you guys the SMC toolkit. I probably caught a little bit of a glimpse when I was scrolling through here, but it has 4 features in it right now. It has the ICT New York midnight open line and the New York 8:30 a.m. open line, and that's the one we'll be going over first. The ICT methodology behind like the midnight line is that is kind of your premium discount zone for the day. Like this is a sell while above, buy when below type of scenario. Excuse me. Whether you're using kind of like the 1-minute chart, 5-minute chart, 15-minute chart, if you're a New York trader, a lot of times, this is probably a bit older of an ICT teaching, but it's still something that holds very, very true, is the opening price right at midnight. If you just kind of take that price and draw a line, a horizontal line to the right, the general premise is that most trade signals to go long below that midnight price are going to be valid. And most sells above that midnight line will be valid. So whatever your actual entry method is, this midnight line or later on in the session, the 8:30 line, are kind of good ways to just gauge very mechanically drawn levels on a day-to-day basis. And I'll show you guys here on a few different charts, like the 15 and the 5-minute, just how useful it can be. So you can see there wasn't really like an entry on the 15-minute, but on the 5-minute, depending on what your confluences are, you have a nice liquidity sweep, a run of the liquidity up here from the prior day. You have a nice price action pattern with the evening star there, and then Bob's your uncle. You have a fair short there. Similarly, at 8:30, we'd be looking later on in the session for price to kind of dip in, kind of like it right did there, right before taking a long. All right, we show you guys a couple more days here, because it tends to just be similar, like across the board. This isn't like, it's not magic, guys. I highly encourage you to go check out like the ICT course where Artie talks a bit more about this type of concept. It's not magic, and you're going to find days where it just completely screws the pooch. But this can be a very good guideline for people who may be struggling with consistently drawing levels on a day-to-day basis. So this is, let's see, Thursday. So this is just yesterday. Similarly, when price opened up at midnight, you just take a line, draw it to the right, And then you have your buy opportunities when below that line. And of course, you don't really see any sell opportunities above the line, certainly nothing that brings you back into fair pricing. But this kind of helps steer you with mechanical levels, especially once you have a bias. And a bias can be gotten multiple ways, but one way, and I will end up deferring to one of our streamers on this, but I'm going to show you a little bit right now. One way that is just absolutely fantastic to form a bias, in my opinion, is by using DR and IDR. So DR and IDR is a concept developed, pioneered, I don't necessarily know the right word for it, by a guy on YouTube named The Master. Really smart guy. He's been in the business for multiple decades and knows his stuff. So I will say to you guys, absolutely, please go check out Alex's stream on this. Alex is just an absolute artisan with the DR and IDR concept. So I want to show you a little bit of what we can do with the DR and IDR. And then please go check out his streams to go a bit further into this theory. The rough general idea of DR and IDR is that from 9:30 open time, it's happening right here. So it's happening as we speak, but we'll go to yesterday so we can get a better view. Your 9:30 open time, when the New York Stock Exchange opens up, that opening time and the entire hour afterwards, so 9:30 to 10:30, is considered one of the most volatile and most important trading times of the day. And that creates what's called the defining range. The high during that hour, excuse me, the wick high of that hour between 9:30 and 10:30 creates the high of the DR range, the defining range. And the wick low, in this case, it looks like also the open price, would create the low of that defining range. The core theory, what I felt was the most important thing to take away from the DR IDR methodology in general, was that after this session is established, once price goes and breaks that range, there's more than an 80% chance, or right around an 80% chance historically, that price never comes and breaches this bottom DR range. So there's a lot of ways to trade with that, and I found the most kind of consistent would be to use it as a bias. So you could establish your daily range, or I'm sorry, your defining range, with what happens during the 9:30 to 10:30 hour. And then once you see price break, Bruce, I apologize. I couldn't tell you for every exact Forex pair. But yeah, it's very high. It's very high. It's above like 60-70% on the stuff that I've seen tested. And I know
once
that
you get this indicator, then you could test
and
out yourself on your favorite pairs.
Yeah, it'll be available later on today for you guys. But you can even see that like the DR stuff is it prints very historically. So it's very easy to check how often the bias works. And I will kind of defer a bit more to excuse me, Alex, in regards to talking about like the overnight session and the London session, which are called ODR and ADR. I'm going to kind of leave that to him, but I just want to kind of show you guys the New York Stock Exchange open DR, because this is kind of, I know a lot of our traders trade during this time of day. So I want to make sure you guys are aware of this. Yes, indicator will be coming out. Oh, Jay, that was you. Never mind. I don't need to repeat what you say in chat. So to kind of go back to echo what I was saying before, the way that I found most useful to use the DR is as a tool to kind of help you find a bias for the day. So we have our defining range set. Price breaks that defining range and then never comes and then blows out the bottom. So then once price kind of retraces back into here, you're looking for your break and retest. Yeah,
retracement right there.
Yep,
it's at least a 61 that happens. Well, I'm talking about like the next one to the right, like that big wick, because that technically filled with the
let me do this real quick.
With that big wick to the right.
Yeah, I mean, there's good breaks and retests. The DR, like the underlying strategy, and again, go watch Alex for this one, but the DR strategy that you would learn is very in line with like break and retest stuff with just standard price action. So if you kind of, I mean, this is kind of like a full retracement, but yeah. And actually one thing that I will note that we had to kind of take out from the the master's version of the indicator is like the standard deviations and stuff. So I can show you guys really quick. One thing that is very important to note pretty consistently is like the midline of the DR and the IDR. Like kind of as we saw in this example right here, like price really kind of came back right to that midline. So it's worth noting, and drawing it on there sometimes for yourself. Definitely, take that into consideration. And as you learn more about the DR and IDR concept from Alex, you'll see the indicator that he uses has a couple more lines drawn in there. And I'm sure he'll go over them, a bit more. And the lines that we omitted from the indicator are generally based around like stuff that you can draw in with the fib tool. Tony asks, is it better on the 5-minute time frame? The DR IDR indicator, I believe, was developed more or less on the 5-minute time frame. It uses the candle wick from the highest and lowest 5-minute candle during the hour between 9:30 and 10:30, and it uses the candle body high for the IDR line. Forgive me, I didn't tell you guys that part, I guess. So this top line represents where the wick reached. This is the DR line, and this is the IDR line. The IDR is kind of like your intermediate intermittent area defining range. This is kind of like an early signal that if price comes up and breaks this line, there's a really high chance that it's going to go on to break the DR line as well. So yeah, this is the DR and IDR section, part of the toolkit. Yeah, and guys, again, please definitely go watch Alex, because this is awesome stuff. And for people looking for mechanical levels and just kind of to take the guesswork out of drawing their POIs, stuff like DR and IDR just is absolutely fantastic. Can you include the midline, the IDR? We can look. So the reason that we kind of plugged a lot of that out is it took out our ability to print the indicator very far back historically. The midline is very, very easily drawn in. You would just take a
fib or a GAN square.
You would just take a fib or a GAN from the IDR to the IDR. Yes, yeah. IDR works on indices, Forex.
I would show like the settings that you did for GAN so people can see, like you just all you do is like change the opacity of like the color. That way.
So this is how like I have my GAN box set up, and I can even show you guys like a fib setup for this too, actually.
You basically have 3 price levels, 0, 0.5, and 1, and you turn the opacity off on 0 and 1. So whenever you click the little color, you turn your opacity all the way off, and 0.5, you obviously leave a color. So that way, like, you have that 50 line that you could draw. It doesn't take all that long. Pretty easy.
Yeah.
Just do from pink line to pink line.
And actually what you guys will find with like the DR and the IDR is you'll find yourself setting up a fib for it. And with the fib, actually, you're going to go ahead and add on like a 1.5 and a 2, stuff like this, because these are going to be, if you're targeting past your low hanging fruit, these standard deviations tend to be your price targets. Just need to draw it the other way.
Or just do the negative.
Yeah. So here, you can see if you were kind of taking a, I guess this is kind of a bad example. Let's put the one up on this guy. Yeah. So what you can kind of see is that it, you wouldn't have your entry till down here, but you can kind of see that like, your one standard deviation is a pretty good price target for you. So, this part of the price targeting with the system, I'm going to leave to Alex, because I don't want to get too much into that, because that is Alex's bread and butter, and I just wanted to show you guys access to an indicator for it. So. The next piece of the puzzle, I'm going to hop over to the style tab and activate the fractals. So One thing I do need to mention to you guys, you'll see it in the description of the indicator when it gets released. When you plop the indicator on your chart, you got to come press the 3 dots and bring the visual order to the front. If you don't have it in the front, the fractals may not work correctly, these fractals that I'm going to be discussing now. So I'm going to bring it to the front again, and we'll get going. So this is kind of in line with what I'd been showing you guys the past couple of weeks on my stream. These are Williams fractals. These have been around forever. There's a good description in the indicators description about exactly how these are formed, the Williams fractals. So I won't get too into it. It's like an Investopedia article. What you need to know is that fractals print late. Fractals print after the fact. They, like, this fractal would print probably on one more candle closure after this one that I replayed too. Yeah. So you'll see this fractal took 2 whole candles to print afterwards. You got the 2 candles before it and 2 candles after it. Don't close higher than it. That's what makes it a fractal. They print late. You can't use it as like an entry signal or an exit signal, but what you can use it as mechanical levels. This is a technique I saw first developed by Scott Taylor on YouTube. His kind of methodology of trading it this way, and it's been a really cool, interesting way to kind of track breaks of structure and highs and lows for a range that you'd be working in. So the way that I've used these fractals, that I really like using them, is taking them to a higher time frame and then going and getting your mechanical levels that way. And this is just another good way to kind of build your range for the day. So if you're, let me throw on sessions here to give myself some perspective. Of course, sessions is the wrong color. That so you can see a bit better. All right, so for some perspective, you know, if you're just drawing, let's see, if you're just drawing highs and lows, let's go there. So if you're just drawing highs and lows, this is the highest high before we got a little bearish. This is the low fractal that caused that. You know, just keep dragging it down. And you find the fractal that caused this one, this guy. I think we go down one more time here. And then we start to go up. And then you'd be looking for your retraces, you know, into that range when it starts to happen. So as price kept breaking structure, you could keep moving your fractals. So again, you have your low here, you have your high, you have your break of structure here. That's a little hard to see because my colors are all wrong. Here we go. Have a little break of structure there. Price comes down, goes up, breaks structure. You create a range with your low fractal here, breaks this structure, causes this high fractal. You'd be looking for longs continuation in the discount of the range. Here you go. So yeah, again, Williams fractals, just another way, kind of in the vein of the DR, IDR, and the midnight line and open line. It can be a really good way to kind of create a range. And if you struggling with market structure, this is kind of in, I don't want to say like,
it's like a training aid to swing highs and lows.
Training aid. There you go. Because cheat was the word that came into my head, and I was like, no, don't say cheat, Adam. Don't say cheat. And then you said it. But yeah, it's a training aid. You know, if you're trying to learn SMC or supply and demand, anything that kind of involves very mechanical systems, I absolutely recommend you go and learn that, and learn how to set your highs and lows without something like this. You know, setting your you know, grabbing your highlighter tool and going through setting your mechanical highs and lows, excuse me, and everything. But like Jay said, this can be a really good training aid for you to kind of help you with that. So, and again, my preferred way to do this is using it on a higher time frame to establish a range. So most recently, this was our low and this was our high. This was our break of structure. And then again, just the way that I trade, I would draw a little fib on there or a GAN box, something like that, to denote the fair pricing of the situation.
The vertical lines highlighting each candle is from 8 to 12 New York time.
Each vertical line, that's just my sessions indicator. And yeah, I just have it from 8 to 10. Excuse me, my session from 8 to 10:30. Yeah. That's just my personal trading window is from 8 a.m. to 10:30. Yeah. That's a different indicator that we have, the simple sessions indicator. Yeah. All right. So yeah. So then, all right, Adam, we've got these ranges. We've got, you know, the DR, IDR. We've got the midnight line, the 830 line. We've got some lines developed by some fractals, and you know, we've got a couple tools to kind of show us, you know, how we might get a bias. But how can we enter? That's what people want to know, right? How do people enter the trade? That's the last piece of the indicator. So just for limiting confusion's sake, we're going to go down and turn on these Wick styles down here. These Wick styles, this was, oh man, my candle colors are actually going to blow this wide open. the bottom fractals.
Green.
Yeah,
make it green.
I'll just make them both purple, or the pink or whatever. So yes,
it could confuse people too. I would just make it like green, the bottom for the buy.
Yeah, there we go. Good idea. You're right. It would have been confusing. All right. So these fractals, these fractals, and the way that they were developed and originally pioneered is something that was developed by MentFX. I found this on his YouTube channel. This was from a public indicator, and I kind of spent a little time studying this because this is just absolutely like an awesome way of finding a little bit of a like an entry trigger amongst a lot of muck. So what these wicks represent is a fractal Wyckoff accumulation or distribution. There's a lot of big unnecessary wording. Basically, what you need to know is that these wicks show up when, I'll show you this one. This is a great example. Price trades down with this wick and then closes a bit higher. And then in the next candle, price trades past this, sweeping the liquidity of the range that is established by this candle, and then trades higher. That's how these wicks are formed. This is a liquidity sweep on a lower time frame. Now, these print absolutely everywhere. You'll see this is something that happens absolutely all over the place. So how do we make like effective use of these? By using some of the other indicators. You can use supply and demand with this. MentFX teaches this with supply and demand, is he would only care about these wick entries when they occur in a supply and demand zone. There is no sound.
Yeah, there is.
Sorry, buddy. Check your settings. I believe we do have sound. Yeah, so the way that Ment would use this originally, the way he showed it off, he would wait for you know, he would build his story using a multi-time frame analysis, and then on that lower time frame where he might be looking for that entry, he would look for one of these wicks to show up in the supply and demand zone. It can be a great high probability entry. Again, it's knowing where you're going to take them from. So in the example of drawing my 4-hour range here, excuse me, I want to use the 15-minute, but in the example of drawing my 4-hour range, waiting for price to kind of come back into discount before going long, you know, I would just cut back price. And then you would combine this with a couple of other confluences. Like I would say taking this type of trade from discount during your kill zone, during your trading session, something like that could be the good beginning to confluence. All right, so now we're just looking for, we're in discount of the 4-hour range on this 15-minute chart, and we're looking for entries. This guy doesn't really look very enthusiastic about the print. We can absolutely take a trade there if we wanted to, but let's look for something that sweeps a little bit more liquidity, does a little bit better job. So this wick is firmly in discount. The entire candle is in discount. And then the following candle is a nice engulfing candle out of there. So this could be your morning star entry, stop loss below the swing low, and just call it safe. Do like 2R. Again, forgive me, I've been using different colors, so my a bit brighter with that. There we go. Do something like that, and this may lose, and that's okay. You know what? Let me do this too. Just so people are for sure, that this is not a signal service. Yeah, so we could throw on a like a market order right there, and then hope for something like that. So yeah, again, this is an entry signal when combined with other confluences. Like you could see that I was kind of going through replay pretty fast, and I used that wick as kind of my like, hey, price action is changing, and then you saw the beautiful morning star right after the 3-point turn, as Shane said. You can absolutely enter right off the wick. Like you could, if you didn't get into that market order entry, you could have taken an entry like on this guy. And again, you want to cover that swing. You're not necessarily looking to cover this wick right here. That's very aggressive. That's a 7-pip stop loss. But this 10-pip stop loss is very reasonable and gets you a 2R. So this, like I said, and I can put up a link in the chat for you guys to like the Investopedia article on like Wyckoff accumulation and distribution. But if you were
I was gonna say maybe even drawing an easy zone at that bottom wick that you had first like looked at into.
oh
Like,
yeah,
just drawing from the bot, like from the bottom to the bottom of the actual. Well, I was just saying from where the highlight, yeah, like that. You
yeah,
could look if you missed that entry, see if it comes in double
absolutely.
bottoms again.
Yeah, this like these wicks when they show up, very highly confluenced, like you're during your kill zone in discount of a higher time frame range or whatever. Not only are they going to be your turnaround point, but they're going to be like a supply and demand zone that you can almost definitely take like a limit order from later on. Not financial advice. Test that out though. This is like Jay brought up a really good point. Like these
Even
wicks
that pink one too. If you draw one from that pink one to the left of that,
like this guy up here.
No. Like go
Sorry.
wait, bring back the zone to where you're at. Like 3 candles before, like even that little pink zone, like right when like draw zone there, you can literally use it as a breakout strategy at this point. So like you're just waiting,
for sure.
You're just waiting for it to break and close
Price
above.
breaks out, comes back, and gives you another green wick to enter to go long. It's
like
there's a lot to be.
Zone.
Yeah, there's a lot that you can use these wicks for. Again, if you're interested in a bit more, this isn't necessarily something that I'm gonna show it off a little bit in the streams, but yeah, for more information, go check out those YouTubes for the guys that I mentioned. All those guys kind of came up with these methodologies, and yeah, it's really good stuff. And we wanted to kind of, we know a lot of the members have the free version of TradingView, and kind of in the similar vein of the any oscillator underlay that we created a little while ago for you guys. This was something that we thought would be like neat for you, fun to bring in. So yeah, like what's a couple ways we could kind of use some of this stuff together? Well, like I said, if we had even just going into this session, bring it back to here, come up on the 4-hour. I'm gonna go in and once again draw my range. Let me give you like another day's example or something. So we just did this one. So we'll come back here a little bit. We'll draw in a little range for the day. So let's see, we had a break here. There's a little wick break, but that's okay for the purpose of using fractals as a learning aid. That'll be just fine. And here's a little break of structure. This would be for those studying, I think this is a type 2 break of structure. But for the purpose of what we're doing here, this is, a fractal break of structure. And this could mean that price comes down and trades past this. That's fine. But most importantly, we're looking at the overall turnaround of price here. We made like a low, a higher high than the highs that made this low, and then a higher low here. And then we're continuing on to make the higher highs as well. So here you have another break of structure. And someday I'll get all the colors to match, honest.
You just keep changing. You had a flash
each time. Yeah, next week it's going to be green backgrounds, guys. Just you wait. Yeah, so now that we have our 4-hour range, we can hop into, let me just actually take it right before the day here so we can throw DR and IDR into the mix. So now that we have that, we can come here, turn these off. Let's throw on DR and IDR. We'll hop down to the 5-minute so that it draws. And we'll see what the DR and IDR gives us for the day in terms of like bias. All right, so we entered from the top, we created a low. And then we're floating around the bottom the entire time, and we've broken the IDR. So when you break the IDR, which is the dashed line, that's generally a good indication that you're going to be bearish, or that, again, the top likely won't break. So in this scenario, since the bias being given from DR and IDR don't really match up with what I'd be looking for with my range, I might be looking to sit the DR out on this time. So this is my current 4-hour dealing range or defining range. I'm sorry, this is my current 4-hour fractal range that I drew with the fractals. This is the halfway point, and most of the time I'm really just looking for reasons to buy when I'm in the discount and sell when I'm in the premium. So the DR is in the discount, but it's kind of showing me a bearish bias. So again, I would just be looking for a reason to go long. Zoom up a little bit. And this might end up bringing us into like the next day or something, and that's okay, but we'll check that out. So let me throw the other DRs on. This will help us in this scenario, I believe. Yeah. All right, and we ended up breaking the range anyway. So this was like an overnight. This was during the Asian session. I believe this is ODR. But yeah, you can kind of see this ends up being a little bit of a liquidity grab here. This fails and ends up going against the probabilities, but that's okay. Even if we end up taking a loss on something like this, say we take a loss here, like this massive, pin bar here. Say we take a loss, there, we enter in the market, trying to go short because of what the ODR does, or ADR, sorry. Yes, the after, yes, apologies. Say we end up taking a short here just because of, we're in premium of the 4-hour range. So we'd be okay possibly looking for a short here. We get burned, and that ends up being okay, because, you end up having a similar scenario again here where we say, okay, we broke to the top. We created, a good strong, pin bar here with a good strong wick, and then we engulf straight out of it, So there's another opportunity right afterwards. Again, just by using the framework of the DR and IDR, you're kind of able to quickly identify that, okay, I might have been on the wrong side of the bias right here. But there's opportunities coming back afterwards. So yeah. And then another way you could kind of approach your entry, like I was saying before, is even with like the DR and IDR, is you could be looking for these wick highs and lows to kind of give you entries too. So after you see, let's pull up a completely fresh day again. So after you see kind of like I'm just kind of trying to be a little bit random with what I end up picking, guys. So, okay, we'll go just a little bit forward. So I'm not going to utilize a 4-hour range here. I'm just going to try and utilize the DR and IDR. And let's see, this is the leftover from the morning session. Now this is the New York Stock Exchange open, and this is the DR and IDR. So I'm going to just try and base my bias off of the DR and IDR, and then find an entry using the triple M wicks. So let's see. All right, so price broke above the DR. So I'd be looking for a little bit of a retrace, and I'm just looking to go long next time I get a green wick. And we end up getting one here. So we'll put a market order there. We'll cover, see, this is 3 pips. So I have no desire to take 3 pips, but this is 7, and 7's very reasonable. And 7 kind of covers me most of the way to the midline too. So let's just grab a 2R here. So this indicator will work on, I got a message for this. An indicator can work, this indicator will work on any asset in terms of doing what it's algorithmically like told to do. This will always print your DR from 9.
Yeah, it's not printing you a specific buy and sell signal. It's just giving you indications on what's happening in the market, and it's up to you to figure out if there's a probability there or not.
Yeah. So we got the womp womp, we got the loss there. And similarly, we'd just be looking for another green wick here. Oh yeah. See, like these are okay. It's my eyes playing tricks on me. We got a green wick. Let's see. We got a green wick. We swept the liquidity kind of created here. Traced our way back down into this little bit of like a flip zone here. So yeah, this green wick particularly feels pretty well confluenced. So I wouldn't know about that candle afterwards. So let's pretend that I still don't know about that candle. Yeah. Get ourselves a little market order, you know, you could either cover the bottom of this demand zone, or you could kind of cover the swing here. So we'll cover the bottom of the demand zone and we'll go for like a 2R. And this might be asking price to move a lot. No, it's only 8 pips. This should be okay. A little bit of a 2R there. So yeah. And let's see what we get. Ooh, oh yeah, just flirted with it. Yeah. But yeah. So unfortunately, a couple losers, but we love showing off the losers. You won't be able to be successful in the long term till you accept the losers. So unfortunately, the way it happens. But yeah, so this is kind of just a taste of what you would do with the wicks in terms of entry. I highly recommend that you would both go check out, like, you know, the guy's YouTube videos to learn a bit more. I believe, and I don't mean to throw them under the bus. Actually, I'm not going to name any names, but stop by the SMC chat room and ask around about these wicks, and you will find some traders that use these. I won't throw anybody's names out there because I don't know if they're, you know, rushing out there to kind of, you know, be the face of certain things. But yeah, ask around if you want some help. I'd be happy to help you with it a bit more. But yeah, so this was EU. I can hop over to like the NAS 100 a little bit. I'll show you just a little bit over here for like a few minutes. And then, yeah, if you guys have any questions, actually, I guess I could turn on the chat and scroll up a bit. Make sure.
Oh, Joel.
Mostly all caught up, right?
Yep. It was, yeah, the main thing was about just like, can we use this on different pairs?
Yeah.
Like, what does it work best for?
Yeah, so absolutely. I would not recommend having like absolutely everything turned on in the indicator at one time. You know, definitely kind of pick with what you want to work with right off the bat. So let's do like a premium discount on NAS setup using the like the midnight and the 830 lines. And you know what? Let's just do a scroll back to like here. So we don't know what actually happens. All right. And I mean, like simple enough. I'm just with the way that price is going here. You know, where price is living currently so far below the midnight line, I'd either be looking for a really well confluenced reason to take a long back up to the midnight line, or I'd be looking for price to kind of come up to around the midnight line during the NYSE open, and then I'd be looking for a short from there. What are we on? 5 minute, 15 minute? 5 minutes, good. Why not? So most importantly, going to wait for, you know, the open of the day, which is coming in a few candles here. There we go. So price is really far away from the midnight line. So I'd almost be looking for a little bit of reason to scalp along going northbound for this. So what can we kind of infer? We got to use a bit more than the 830 line and the midnight line. So yeah, let's hop back onto DR and look for a reason to go long up to that midnight line. There's our 830 line. Oh, and there's a minute line. Yeah. All right. So
so about that.
Oops. Yeah, I was like, oh, we're kind of far away, and I was like, oh yeah, New York Open on NASDAQ will just rip this 100 points. I wasn't even thinking about it. I've been staring at EU for so long, I forgot that, you know, 9:30 a.m. does this move. Yeah.
Malachi has Malachi has the greatest question of life, of life itself.
Yeah. So SMC is a framework for looking at the market. ICT is a creator, a content creator, a trader. I don't want to take anything away from any accomplishments he has. ICT is a person, first and foremost. SMC is a framework for looking at the market. ICT developed his own methodology that is strikingly similar to a lot of the concepts taught in supply and demand and kind of like Wyckoffean theory, Dow theory. But he kind of rebranded them. So yeah, but he did so in a way that brought it to the forefront in like the YouTube trading community. And so yeah, he gained a lot of traction, and he's not worth ignoring, for sure. Check out the ICT room. Shout out to Jay in the ICT room showing off his order blocks all the time.
It's not me.
Yeah. So yeah, this one ended up being fun because it was NASDAQ. But guys, let me know.
They're the same damn thing. You get to around the same conclusion on buying and selling with different names. That's my answer.
Yeah.
And so people hate me for that, but it's okay.
I think it's oh man, somebody had like a really good whether you're using ICT or SMC or price action, you're baking the same cake, you're just using slightly different ingredients or something. Like somebody said that in chat like a couple weeks ago. I was like, okay, I'm picking up what you're putting down with that one. I like that. Yeah, I was like, you still get the same dessert. I just used buttermilk frosting and you used the whipped cream frosting or something like that. This indicator will be released later on today, hopefully, barring any issues. It should be, I want to say, slightly
after the close of market.
Yeah, it should be after the close of market, after Jay's and Christie's stream about Strat Wars. One of them will probably drop an announcement with a link that you can go grab it. All frosting is good frosting.
Yeah, Ashley, you're not wrong.
You are very correct on that one. All frosting.
Unfortunately, you are exactly correct.
Yeah. Okay, so kind of playing with what we were playing with before. I'll just kind of finish out this example. So DR entered at the bottom of the range, came all the way up. The hour ended, the price broke the top of the range. So now I'm just looking for my retrace. And again, if I can get something down really close to this midnight line to go long, I'd be a happy camper. I mean, that's pretty close. I mean, I'm willing to risk it for the biscuit. We could even 24 points on the NAS. Now let's call this a fixed 20 with 2 RR. Shout out to Roxy for the NAS. I'm not on the 1 minute though. So yeah, this is close enough. And we'll see.
Last one.
Oh no.
That's fine.
There we go.
Huge.
But here we go. So
you would have got.
If I had the patience.
Your patience would have been rewarded.
Yeah. Let's see. I mean, it still might be a we'll just go to the DR. Who cares? We'll just shoot for the moon, get a 4R real quick. Discretionary, but we're coming up on the end of the trading day, and you might look to close before this. Oh no, this is actually 2 p.m. Never mind. Yeah, we just get wiped. Nice little liquidity
suit
though.
This is just a losing string. That's kind of
yeah, it happens. Unfortunately, but yeah.
I think it does end up hitting around 2 though. If you would have gotten S greedy.
Yeah. I was super greedy. If it was
Wick.
Just, yeah, it's totally a 2R. I just got super greedy. But yeah, I mean, this is again, do your testing, guys. This isn't a signal service or like a specific strategy we're putting out there. This is just kind of a functional toolkit for you guys to kind of
increase your bias, like figure out a bias, because some people might you might have trouble filtering, and that's okay. Like we're all here to learn. But like the DR IDR could help, even the 4-hour Williams fractals, just to get your swing high and swing low mechanically to kind of help you understand your trend or where to potentially target or where it could reject from. It's a good. So like it's not like you're having to throw. You should never just throw away what you're doing now just because you just watched us do this. But see how can this potentially help you more? And if you can't see it, then maybe you don't need it. But
and this is I'd be remiss, like Alex would yell at me in DMs if I didn't show this off, just like how cleanly price comes back and just respects like your overnight and your London levels, even with the DR. Sometimes it's it can get pretty silly. Like here's your midline. I think this one ends up coming like right up to the midline for you of like the previous. Yeah, like look at how precise this can get sometimes. So go check this stuff out, guys. This is like it's super it's super cool to kind of just take a little bit of the guesswork out of things like the bias and the POI selection. It's helpful. And like I said, it's not necessarily the end game to be using that stuff, but it's a learning aid. You know, it's all learning how to be a successful trader is something that you do in steps. It's not like a switch that you flick overnight. So
Can
oh
you look at
man.
this on AU or AJ for funsies?
Yep, I switched over to AU and we found that kind of that midline of the London session DR entry there. Yeah, so Trung asks, should we use this indicator combined with one of our strategies such as Happy Trail Brute Force? You absolutely can. That's a fantastic question. Glad you asked it. So if you're using this indicator to kind of give you your bias and say that, you know, okay, I'm only, you know, I'm only selling below the midnight line, only selling above the midnight line, only buying, you know, above it. That's where you can kind of come in and throw on. Oh man, Happy Trail is probably not the right one right now. I don't even know how to work Happy Trail anymore. I gotta go check that out still. All those updates. Holy Stairmaster fractals. But you know, here's where you can kind of come in and check out Alex's stream for this for sure, guys. But here's where you can kind of come in and say like, okay, price came up. The first thing it did in this DR was break to the top. That happened before the bottom. So the top, since it was first, creates your bias. And then you get your Stairmaster signal over here the next time it breaks out. And you can just, you know, ride it up. Cover your swing, grab a 2, call it a day. Yeah. And I mean, this is kind of just lazy and slopped together in like 30 seconds. Go check out Alex. Alex is doing fantastic things with like the DR combination with Stairmaster. He figured something really cool out. So
even the day before, like during the DR range, like you get your sell right before you get the break, or well, during London actually.
Right here. Yeah.
Well, yeah, during the London IDR or whatever it's called.
It's okay.
You get your sell, and then from there you get your break, and then you could literally draw a fib on that impulse move of the break, and it comes up, and it looks like a 70 retracement right there. And from my eyes, no, from after, yeah, that from there to the break, it looks about a 70.
Yeah. Yeah, I'd say that's a 70. Do I have a 70? Yeah, here's a 70.
70 is close enough.
Yeah.
Yeah.
So
like, it's about
the 6-1. Yeah. It's like bang on.
Like 75-ish, probably.
Definitely.
But like you get your break from the DR of London, you get a Stairmaster print, and from there you're just waiting for that to retrace off the impulse move. Even Happy Trail there. You could change it to like probably case 3.
Case 3. All right, thanks.
And then set the higher time frame to 15.
Short. 15.
Bam.
So yeah, I mean, same thing. You get your down bias like right here from Happy Trail, like right in the middle of the DR range, essentially. And I mean, like once it breaks and you've got Happy Trail on your side, like you can just basically take every short. You know, you just got to be good with your stop losses. Don't get greedy. That's something that's so easy to do. Is, you know, like, oh, I got Happy Trail, let me just throw it on the top of that candle. Well, you become liquidity doing that. You know, don't be a bozo. Cover your swing. Go for the 1.5 like Christy or the 2R or whatever, and, you know, cash in. You don't got to make 10 Rs every single day. Do what you got to do.
I like being a bozo.
I like being a bozo sometimes too. So yeah. So hey guys, if you have any other questions, please drop them in the chat. We'll hang out for a couple more minutes for you. But yeah, that's gonna be mostly it for today. Don't be a bozo. That's right, Shane. Is everybody feeling confident with Strat Wars? Is that case 2? No, I think Jay had me throw on case 3.
Case 3.
Case 3.
It's like, it doesn't really matter what you use. At the end of the day, if you want it, like I said before, this isn't like guaranteed to help every single person. but it could potentially help you. Some things that Jinx made, you might have to rewatch this recording and go back and like re-listen to what Jinx just said. It just helps give a potential bias in case you struggle with kind of figuring out where the market is potentially going. But it's not 100% every single day. It's a probability that you need to test for. If you don't, if you can't find that edge or probability using any of these things, then it might not be for you, and that's okay. There's something out there for you to use to help you specifically.
Yeah, I think that's Jay hit the nail on the head, and that's something that's been big for me lately, is just the discipline to make sure you do the testing. Like, I remember the first time I loaded up DR and IDR in my charts, probably like 6 or 7 months ago, the bias didn't hold true for like the first 2 days that I did it. And I was just like, this thing lost me 2 days in a row. There's no way like it's got like good historical accuracy. So what did I do? I went and I just tested the concept. I just went and I tested like the bias. And it was like, I had those 2 losses, but it was like 15 wins or like 15 correct biases in a row right before that. So it's just like, oh crap, that's like 80%, isn't it? You know, it's worth going and testing this stuff, guys. Like, because I can't tell you how many times I threw an indicator on my chart, lost like 2 entries, and then I was like, oh, this is BS, get out of here, you know, and then just never think twice about it again. It's worth doing the testing, guys, if this is something that you're interested in. So Morgan, I am going to be releasing a video for the members, kind of a much shorter explanation type video as opposed to a live stream. I'm going to be releasing that for you just as soon as possible. Still trying to find my bearings in trading. Didn't feel confident. No, hey, that's good. It's better better to take your time, DD, for sure. I would say do your best to you know, just participate in chat. Honestly, the thing that'll help you feel more confident is just talking to other traders. That's kind of like your gateway into, if you're like super brand new, just talk to other people who do this. Because I think Jay will probably tell you the same thing. Like, it's rare to come across other people who do this in your like everyday life. Like, I don't really know any other day traders in my life. And it's tough. So just make sure you're talking to people. Go use that mindset room. Do some memes in general with Bear, you know. Yeah,
because people, you say you're learning trading and people like, oh, is it that GameStop stuff?
Yeah,
it's like, no, yeah, sure. And then you just walk away.
Oh no, Mo. Did you see that message from?
Yeah.
Oh man.
You're welcome, Mo.
Yep. Enjoy, buddy.
You only had 17 indicators on your chart.
Yeah.
We need to make it 18.
Well, this is good.
Actually, it's almost like 20.
It's 4 more. Yeah, this one indicator will add you 4 more, Mo. So enjoy, buddy. Just 9. There you go.
Yeah, just 9.
Yeah. Yeah. I apologize. Ola Wuyis. You're right. It absolutely, like during demonstrations, it can absolutely look like magic. So please go do that back testing. One of them is 3 MAs. Yeah. Oh. Well, if your indicator is just a 3 EMA indicator, you might as well just go throw on like DeLorean, because that's got like 3 EMAs, you know. Just use that instead.
I think this is going to wrap it up soon. So any further questions? Like we said, this is going to be releasing at the close of market sometime, probably after me and Christie's Strat War Live. That way we're able to kind of send some announcements. Jinx is also going to be doing a very nice brief overview of this entire thing in a very shortened format to help everybody else. And then from there, y'all have the entire weekend to just kind of
play with it,
chill out and throw this on and start your testing.
Yeah. You guys, if you have any questions, feel free to, you know, ping me in like SMC chat. I'm going to try and do my best to keep most of the chat about this indicator in the SMC chat room. Obviously it's going to spill into other places, but, you know, feel free to ping me. You know, if you notice anything about it, just let me know. If you have any questions about it, let me know. And I'll get that video, guys, out for you just as soon as I can. So that's going to wrap it up for us today. Keep a lookout in the announcements for this. Keep a lookout for the the Strat Wars stream later to see how much further Outback pulled into the lead. And yeah, I think that wraps it up, guys. Have a great weekend, everybody. Have a great weekend, David.
No, you.
Thanks, Miguel.